Hello and good afternoon, everyone. My name is Matthew McCora. I'll be your host for today's event. Excited to be here with each and every one of you. Started just a few moments behind 4 because my trading account likes to make a lot of noise when the market opens and then closes. So I didn't want you to have to worry about hearing all that good stuff. All right, so I'm going to be taking you through one of my most favorite events that I host, and that's talking to those that have both seen me before and then those that have yet to meet me, and walking you through, to me, a simplistic yet powerful approach to identify and leverage price action. Okay, so the overall method itself is all about identifying key breakouts in the market, and then of course being able to understand when and how to manage that entire process. So what I want to do before we get too far down the road here is I want to make sure that we do a simple audio and video check. So at this point, you should be able to just see a slide that says sound check, and then you should just be able to hear and see my webcam going. If that is the case, then please let me know by typing in a message into the question section, say hello, give me some indication that all is well, and then that way we can jump right in to the meat of the event today and get through some of the housekeeping items here. I appreciate it. Thank you for all the feedback. JR, appreciate it. And all the rest of you. Perfect. Got a comment. Looking good there, old buddy, old pal. All right, love it. All right, so just to let you know, this question section is private. It's intentional. People put in all sorts of different types of questions, personal questions, things of that nature. And I just feel it's better to keep that private and behind the scenes to maintain, of course, privacy. So that's also a benefit to you because you can rest at ease, not worrying about anyone jumping in on a question. Unfortunately, in today's age, there's a lot of trolls out there that like to bring their negativity to groups that have no desire or willingness to even be in the room. They're just trying to be negative. So I don't like that type of environment, and that's not what this environment is. All right, so great questions. I appreciate. If you don't think it's great, you think it's basic, I'd rather you ask it. The only bad question is the one that you leave with. Okay, so rest at ease there. And if I don't know the answer, I will promise to do my best to find it out. And if I can't find it by the end of the event, then I'll make sure I get back with you. So it looks like everything is good to go. Got all the good comments about audio video. Thank you, Sandra, coming in from Utah. I love Utah. It's a great state. There's a lot of financial companies out there, so I spend a lot of time in the great state of Utah throughout my career. So at this stage, let me walk you through exactly what we're going to talk about today. So we're going to be focusing on momentum and trend patterns. Now, the first thing before we talk about managing money in an overall method is to understand, number one, what direction we're going to be trading, especially this year in specific. For many traders, there was a rush of many traders to the financial markets during the COVID shutdown period. We saw the highest levels of retail volume hit the markets in years, and some of the daily activity in 2020 actually surpassed historic levels for retail traders as a whole. And so if you're one of those retail traders with me today and you started in 2020, then for sure you've never seen conditions like we have today. The last conditions that I recall that get close to this environment is back to 2007, 2008, and the latter half of 2009. All right, so it's been quite some time. So especially in both green days, red days, in bull markets, bear markets, it's wildly important to understand what is on the horizon, right? What can we expect next? And that's the magic question that all traders that I work with are uncovering and wanting to uncover is, okay, we're here. What do we expect next in the next few days? What can we see in the market over the next few weeks? That's what this method can help us all uncover. So what I'm going to be doing is spending the large majority of my time today on charts. Okay, so I'll get into that in a moment. But I like to teach, I like to be transparent. So any types of questions about my charting setup, the tools I use, feel free to ask it. That's what we're here for. Now, what we're going to be doing is talking about how to catch and identify breakouts. So on the screen in front of you is just some recent examples of trading signals that this strategy identified. We then translated it and sent it out to our traders as an option trade. So we'll walk you through this today. The reason I start here is because I'll bring these back up as we get through the actual teaching portion, and then you're going to know exactly why we decided to buy a long call for Gurn Corporation. Made 120% in just a month trading a long call option. You can trade the stock if you want, but this was also an additional options trade to go with it. Both bullish and bearish opportunities present themselves. So instead of shorting a stock outright, what we'll do is we'll find a breakout, a bearish breakout move, and then we'll find the appropriate option to trade. In this example, is buying a long put. And so trading both bullish and bearish trends all come down to identifying a very specific type of pattern. And I'm going to be walking you through that pattern today. So people always want to know, well, how does it work? How well does it work? Well, from the last few weeks, the strategy has captured over 250% net, about 6 out of 10 winners. We have very strict equity management, so we try to cut our losses when we're wrong quickly, so we don't hold losing positions and we don't extend losses. And then we have predefined profit targets that we automatically exit. Okay, so this is just a view of the type of recent performance. Now I'm going to get into more of the details as we get in. I just want to give you a taste of what to expect here today. Now I've got to show this. This is a classic disclaimer shown on any financial event like this, where someone's in front of you, they're talking about current market, they're talking about forecasts, they're talking about previous opportunities and trades. We've got to disclose the fact that trading in the financial market carries risk, and you can lose your entire account, you can lose a trade, and you can win. So what I like to say here is use risk capital. You know, if you're going to be investing in the financial markets, then it needs to be money that if you do lose, you can still put food on the table and keep a roof over your head, right? So I think if you're in a presentation like this, you already know that, but it is my obligation to go through that. So I want you to think through and remember this phrase. We're going to focus on simple and repeatable. So simple and repeatable steps to trading is my goal today. Anything I share with you today is going to be 90% objective. So we're going to be looking at data points that are based on math. So it's objective. That's where we get the objectiveness from, is from the math of trading. Now the 10% subjectivity, we'll talk about that, but I still want to make it fun. You know, we want to make it so where there's some level of excitement. You know, we don't want to remove all of the emotions and subjectivity. But in my experience, I found that the more we can focus on objectivity, the less anxious we become and the less erratic we become. So simple and repeatable. I'm going to be teaching today. So nothing's hidden. Everything from how I have my charts set up, the specific ways I have my indicators on the charts are all open. There's nothing that's going to be hidden from you. So you can take exactly what I share with you today and actually use it for yourself if you like. Okay, that's the level of empowerment I want to give to you all today. Now, because we're in the financial markets, it's all about return on investment. So if I'm going to invest $1,000 into a trade, my goal is to make a return on that investment, right? So what I'm going to share with you isn't just about analyzing the market or forecasting or identifying uptrends, downtrends. It's all going to come down to how do I actually use it to generate income, right? Be it short-term, long-term, obviously you can take that as you wish. That's your personal preference, but the goal is to get to a point where we can identify highly probable winning trades. All about driving return on investment. So ultimately, I want to spend just a few seconds here just introducing myself. I recognize a lot of the names here. I've spoken to this group before in the past, so I know many of you may probably recognize me. But for those that don't know me, I've been in this industry since 2007, and that year should sound familiar because that's the last time that we've been in any sustained bearish market, and we're still haven't been as long as the 07, 08, 09 bear market yet. So ultimately, my background comes from learning the financial markets through some of the toughest trading conditions. And then I've also been able to see some of the most fantastic recovery periods following those types of bearish conditions. So the strategy you're going to see today actually can help us identify when we're truly on the way up into that active recovery phase. From a high level perspective, I think we still have quite a few ways to go until we get to that recovery point. but that does not mean we're not able to capture profits from the market. So be it red days, green days, with the strategy that I'm going to share with you today, you're going to be able to see things a lot more clear than what you've seen so far when it comes to looking at a chart, right? So I believe in momentum trading, so you're going to see me use volume a lot as a primary indicator to know if we've got a pending breakout. Any type of charting skills, from basic candlestick formations to trend line drawing to Fibonacci usage and all the other thousands of different indicators, I've got tons of experience on those. Now, I don't deploy a lot of manual analysis, and you're going to see why when I get to the charts on some of those pitfalls of manually drawing trend lines and other manual analysis tools out there that exist. So I'm going to share that with you, but I do have a lot of experience in that side of the business as far as not only teaching, but also using those skills. Now, the primary reason I'm here with you today, when I was in the industry starting off back in 2007, I did things a little differently. So I was hired by a company at the time. It was one of the largest financial education and trading technology companies to become one of their coach and trainers. So I started off in webinars just like I'm doing here. And so to get to a point where I could speak to others and teach others, I had to go through a rigorous training process on charting skills, trading skills. So I started early on into the charts, and I got paid to learn how to trade. Most of you have to do the opposite, right? You either learn from the school of hard knocks, or you invest in education from an expert, a company, a guru, things of that nature. But in my time, I not only learned how the market worked, learned how to trade it, learned how to teach it, I also found a passion of coaching not only traders, but also team members. And so I actually moved up throughout my career to become the chief revenue officer of that company. So what that did is also gave me insights into not only how to teach individually, starting off in that company, but also how to create programs, how to create systems and support to help create successful traders. Now, my goal, it's in my title, was revenue, right? So for us to create new revenue, we had to create new product. Now, after a very long time as the chief revenue officer, I started to disconnect from just a revenue focus. New product, new product, new product. And so at 2018, I decided to step away from that company and took a small mini retirement. But after 6 months or so, I just could not leave a market that I was so passionate about. So I vowed at that point, I'm going to do this differently. I'm going to go on my own and network with some of the top people that I met throughout my career. And with that was born Concordia Financial Exchange. And so from that, we decided to do things differently. And so for me, I'm less concerned about creating new products. I only have a small handful of programs that I run, very small handful. It's more so focused upon teaching and empowering my traders. And so it's less focus on what's the next greatest thing to promote, and it's more so on providing education, providing content, providing things that actually work, tools that work to help drive your performance. So you're going to see that hopefully today, a different approach to how we actually teach and how I actually provide content and material out there for you to use. All right, so with that, I'm going to jump into the charts now. I don't like to spend too much time on PowerPoint. I like to be into the market and talk about the latest opportunities. So I'm going to turn off my webcam so we have more real estate, and we're going to jump over into the charts. I love that comment. Got a comment on Apple. So we're actually going to build a watch list. Every time I come in a room like this, you know, people would just throw random stock symbols at me. So I decided at that point to say, look, why don't I just create a watch list, and then we go through anything that you're interested in, and we can break them down with the strategy I'm going to share with you. So at this point, you're going to see charts in the background. Everyone should see charts. Let me know if you can see them in the background. It's a different sharing tool, so I just want to make sure you can see charts. So type in a yes, give me a thumbs up if you're on a mobile device. Just give me some indication that charts are up on the screen. It should fit the screen since I turned off the webcam for this portion. Okay, good. So it looks like that's connected. Perfect. All right, so I'm going to break down all these indicators and all that I have exactly on this chart in just a few moments. But before I do that, I want to get your top stocks that you're interested in. So at this point, everyone go to the question section and type in stock symbols. Please do the symbol, don't do the name. It just makes it easier for me to load it up. Drop in the symbol name, the specific symbol you want to be reviewed today. And then I'm going to create a special list for us so we can use your picks, not necessarily picks that I'm most interested in. I always want to get a sense of, different symbols and different stocks that you guys are interested in. All right, perfect. Looks like we have a lot of them. All right, so let's get to building. Let me get my list. Investorexpo. All right, we got Amazon, we got Meta, Tesla earnings coming up here. Las Vegas Sands, we got PM, Kroger, Lockheed Martin, Microsoft, IBM, Oxy, the NASDAQ with the Qs, NUE, Nucor Corp, NIO, DraftKings, Upstart. You all are fast typers. That's pretty fast, pretty quick of you. All right, so we will go through all of these, so don't worry. It's not in any order other than the order in which they came in as. So I'm going to actually use this list here to run pretty much the majority of the event today, okay? We may pull some trading opportunities from this list. So some of these I've seen come up on some of my own personal watch lists. So we could see some additional analysis already ready for us as we pull them up. All right, so before we jump there, I'm going to break down what we see on the charts. Now, this is TradingView. This is a charting platform. I don't trade off this, though you can. I trade and we manage all of our signals with an account at TD Ameritrade using Thinkorswim's desktop platform. But I use this platform to run all the analysis, to run and identify trading opportunities. I also use this software to search for stocks using specific filters that we identify as breakout pattern searches. Okay, so there's a way for us to actually set up filter screeners to look for and identify pending breakouts that I'm going to share with you today. Okay, so that's what I use this for. You don't have to use any fancy charting software. In fact, TradingView has a free account that you can use, and you can actually run everything that I do on the charts with a free unpaid version of the platform. In my career, I learned early on that the Pareto rule of the 80-20 rule holds true for software. 20% of software is actually solid, can actually add value, but the rest of the software from charting tools out there, to me, is just a replication of everyone's other software put in one. So I'm actually anti-expensive software. So I try to really find and showcase tools that are free or extremely low cost. So that way, no matter what your budget is, we can alleviate a lot of the other expenses that retail traders find themselves taking on by trying to get the latest and greatest tools, the most expensive software. In fact, you can use this exact strategy, this setup of indicators that I use, on your broker charts as well. You can go to bar charts, you can go to stockcharts.com. They also have free software too, okay? Now, my clients and I, we use this because we use all the different watch lists. They want to learn on the same tools that they're taught on, right? So there's advantages there, of course, but by no means are you locked in to have a super expensive software to use. So what we're going to do is we're going to break down what I have on the chart first. I'm going to explain each and every piece here of the puzzle to get to an end goal of giving you the roadmap, the step-by-step map of how to identify when price breaks out. That's going to be the end goal in mind. We have a couple that slipped in. I'll add an ET. The first thing when we look at a chart, I'm going to hide some of these just for a second here. This is Amazon, okay? I'm just going to be going through this list today of what you requested. So we're going to start with a blank chart to begin with. The first thing we must do is understand which way is this market heading tomorrow, the next day, the next week? To get to a point where we can understand where a price is going to go into the future, we have to understand what's happened in the past. The reason I bring that up is because a lot of people, especially other companies and trading quote unquote gurus and experts, will use things like terms like, oh, indicators are lagging. Well, every piece of analysis in the financial market is lagging. Nobody has a crystal ball to look forward, right? So for us, we've got to have a basis to use previous price action to help us understand what the next probable move is going to be in the market. So understanding that we're going to be looking back, that's going to help us understand what's going to happen on the right-hand side of this chart. Because here's today. All we have is today. We don't have tomorrow, right? So we've got to understand what happened here to know what's the next probable move to follow. So the first thing I want to do is I want to get a sense of what has the price been trending to? Has it been trending up or down? Now, to get a true sense of a trend, we can't look myopically at one specific time frame. So what I found is that rather than have you or even I in this instance pull up our trend lines and start manually drawing on all of our charts. See, when drawing trend lines to identify trend pattern, it's not only time intensive, it's also an art form, and art is subjective. So rather than do that, what I found to easily transfer a consistent method of trend is to leverage mathematical generated trend lines in the form of averages. In this instance, I'm going to use moving averages. So what I'm going to do is I'm going to start with the first of 3 trend lines. So I want you to transition your thinking from just a moving average and just replace that just with a trend line, because that's what it's doing. It's giving us a trend. Now, the longest term trend that I have here is a 50-day trend line. In the top left corner, you're going to see the first of 3 moving averages. It's 50, which is the length. Okay, so that means that's how far back I'm measuring. I'm going back 50 trading days, taking the close price, dividing them by, adding them up, dividing them by 50, and getting an average price. That's what it's giving us. That's what this red line is on the chart. So if I take a look at the latest price today, Amazon, I'll get rid of post price just for a second. Let's just talk about what happened in the open market. So Amazon closed at $116.36. There's the last price on the right. The 50-day price that Amazon's closed at or traded at in the last 50 days is up here at $125.96. So our current close today is $9.5 or so below the last 50-day average price. So the way we represent that is simply that we're in a downtrend, right? The price is trending lower than the 50-day average. Now, when we're on top of that 50-day average, it's the opposite concept. We're now trending and trading above the 50-day average. Okay, so that becomes our longest term spectrum of trend analysis. You can see how the market reacts as we move below the extension move. You see how strong this move comes down once we broke below and close below this 50-day moving average. Same thing happens on the opposite side when we now cross back above the 50-day moving average, right? You can see the reversal points. So the first thing I want to highlight is tying in these concepts together. So up to down, and then from a down to up, right? Those are reversals, okay? This is going to be important to just keep in the back of your mind. We want to find areas of reversals. When some things are going up, then down to up. Those percentage-wise are trend line breaks. A break of a trend typically creates a surge of price movement in the opposite direction. I bring this up because this is an area at identifying the point of reversal that can give us the biggest percentage move on a stock price. Now when I scroll out, all you're going to now do is consider where are we at in relation to the 50-day moving average. I'm going to include the other ones in here in a moment. But watch how everyone in this room is going to start to see the market through the same lens. Here's Meta. Here's a lot of latest price here. Here's our 50-day average. We are trending below the 50-day average, not just today, but starting all the way back here on the 12th of September, you can see us trend actively lower, right? Here's Tesla. We got earnings coming out tomorrow for Tesla, trending below the 50. Philip Morris below the 50. Las Vegas Sands still below the 50. Kroger below the 50. Now you'll see lots of different indicators or tools on my charts because I'm in the market all day long. So these more than likely at some point came up on my list. See how Lockheed Martin was below the 50-day, now went above the 50-day. That's a point of reversal. So now Lockheed Martin is now above that 50-day moving average. Microsoft is trending below the 50-day. IBM is trading below the 50-day. Oxy's trending above the 50-day. We are above that 50-day moving average. The NASDAQ is below the 50-day moving average. Nucor is not quite up to the 50 yet, but it is getting close, attempting to get back to the upside. NIO trending below. DraftKings trending below. Upstart getting close to a potential reversal. ABBV is on the top of that 50-day. And Energy Transfer just got back up above the 50-day. We didn't have to draw a trend line. We didn't have to sit here and spend 10, 15 minutes trying to identify where's the market trending. Has it been trending up or down? We know just with that simple tool on a 50-day basis, the longest term basis here, where this is going. Where is that latest trend? So when I see us below for Amazon, that means to me this is a downtrend. So any upward movement you see here is nothing more than a retracement in the downtrend. Just like this movement here for Amazon, where we reversed and came above that 50-day moving average. Let's get an up arrow. Okay, so we came here, crossed above, that's a reversal point. Extension, retracement, extension, retracement, extension, and reverse. Anything above this 50, that's a buy zone. Below is a sell zone. Okay, so quickly we can have a very simple way to identify what is the longest term trend on this chart. Now, a lot of you may be wondering why you're using a 10, 20, 50 model. This is a setup. This specific indicator set is for swing patterns. Swing traders, in my definition, there's lots of definitions about scalping, swing trading, position trading. But for me, this is thinking in terms of days and weeks. So if I'm looking to find an entry to buy with this setup I have on the screen, I'm thinking of holding that for days and weeks, not months and years, and not minutes and hours. Okay, so I'm not looking to scalp with this. I'm not looking to position trade, buy and hold for months, quarters, years. This is for an average hold position to give you an idea. So when I enter trades with this specific model, my average hold time is about 3 weeks. So some are 30 days, 40 days, some are 1 day, 2 day, 3 day, right? But overall, about 350, 400 trades in the last couple of years, that's been the hold time. This may be more of a classic look for many of you that have experience. This is a 50, 100, 200 model. This is what I use to give you an idea for more long-term investments. 50, 100, 200. Okay, so this, just to be clear, I see questions coming in on it, is for a specific length of time I'm interested in being in a position. It's identifying a trend in a certain way, certain time frame in mind. Now I'm going to introduce a second trend line here. I'm going to introduce a 10-day to go along with this. So we have the 50-day, which is our longest term trend analysis. Okay, so we're looking at basically 2.5 months of trading time, right? Because there's on average 20 trading days in a month. 50 days, right, is 2.5 months worth of trading activity. 20 days is giving me about a month, right? 20 trading days. And then 10 days is giving me about half a month, okay? So I have a 10, 20, 50. On the charts right now, though, I only have the 10 and I only have the 50 turned on. The 10 is going to be our closest, our most inner trend line and our shortest period that we measure. And it's going to help us on two fronts. Initially, what the 10-day helps us is to build confirmation of a trend. Let me explain here. I'm going to go back in time and I'm going to talk about this initial reversal back here for Amazon. So remember what I described earlier about reversals, up to down, down to up. Well, this is Amazon trending down. And then we see the first time that we flipped to above the 50-day moving average. Now watch what happens to the price action here. I want you to pay attention to the relationship of where this 10-day moving average is in relationship to the 50-day moving average. So as more bars appear, more days close, you're going to see how that 10-day does not cross above until 5 or 6 days later. The initial move here was the initial moment. And then the market, the bears, tested this move, created a retracement. Then we found support, and you see us now flip on top of both the 10-day and the 50-day. So this is adding a level of support underneath the price to build the base for the next move to follow, which should be up here. So watch what happens now as the price starts to run away from this 10-day moving average. Comes back to it, tests it again, comes back on top of it, and you can see this extension continue. Now we are well above this 50-day moving average. We are also riding the 10-day average price as we come up. But then what happens is we start to get below that 10-day. So even though we are above the 50-day, we have now shifted below that 10-day. So you can start to see a short-term trend break, even though we're above the long-term trend, to anticipate that the price is going to come back down. So the relationship, once again, helps us to build support and get confirmation of the uptrend to continue here. And then it also helps us identify when it's going to end. So we flip. Think now of these trend lines as support and resistance. That's what they are. They're angled and they are calculated to give us an average price. If we're above it, right, it's support. We're below it, becomes resistance. Resistance pushes price down. Support holds price up. So we were in support this whole run, and then we started to go below it. And you can see us now in a resistance block, and we're going to come down to the 50-day. So by incorporating a long-term trend with a inner trend line like this 10-day, we're able to use it initially to get the confirmation of a breakout, and then we're also able to use it to see a trend expiring or running out. The same thing's going to happen when we get down into a 20-day moving average. It's just going to now give us a mean average in between them to also bolster up and add other dimensions of support and resistance. So now when I reverse back again, and I'm going to start, I see your question on Forex. I'll answer that here in just a moment. Let's come back to this initial move. I want you to see how these trend lines start to really highlight this future move. So there's initial bar. I'm just going to make an arrow on the initial so we can keep it focused on our minds. And then I'm going to highlight again once the 10-day crosses. There's the 10-day cross. What do you think is going to happen to the 20? It's going to come later. So here is the 10 and 20 now crossing above. So now we've got 1, 2, 3 trend confirmations. At that point, you can see how this 20-day now flipped from resistance back here to the support bounce here. I like to demystify the randomness in the market. And then we come, you see how these just help guide and anticipate not only where is it going to come down to. See, it came down to that 50, and then look how it bounced, and looks like it's coming up to that 20-day, flipping back again. So using a consistent method of identifying trend flips, right, from down to up, that's this initial phase. Then being able to recognize when that trend is ending is extremely powerful for expectation. So right now, where we sit with Amazon, we are above the 10-day and the 20-day, but yet we are still below the 50-day moving average. I want you to remember this 50-day is the biggest weight of resistance. In this formula that I have on the screen, the 10, 20, 50, the 50 has the biggest weight. The longer term, many of you may have heard this before, right? The longer term trend holds the weight in a trend pattern. So that 50-day becomes that heaviest weight. So what has to happen for Amazon to come up and test to get to a point of getting on top of this is it's going to build support underneath this price. But it doesn't happen in a straight line. Case in point is right here. You see how we were trending below the 10, extending down, and then we get on top of the 10, but we run out of momentum at the 20. And second day comes, we can't get above the 20-day. Third day comes. Well, at that point, bears take control and push price down again. So now that we flipped above here, what the pattern likelihood here is this pattern. Come down back to test these lows, and then from there, build another base to come up and test to come up to that 50-day moving average. The markets don't go in a straight line. And so being able to identify where we're at based on the current trends, the placement of those patterns is where the empowerment becomes readily available because we're using data. Look at Meta, same instance, running hyper bearish, but now we're running out of momentum where we're now above that 10-day. So this is a point of support. Still downtrend, right? Tesla, same instance, opened here, closed back below. Philip Morris, we're in that sandwich effect. This is an inflection point, which I'll explain here a little later, okay? Trending below Las Vegas Sands. Kroger, below all three trend lines. So when now you start to see Lockheed Martin, we were below the 50 today, skyrocket Lockheed based on their earnings today, and flip directions. Type in a yes if you see this, right? We were below it, but now you're seeing a moment where we flipped. We were bearish, now we're on top of it, right? This ability to find this pattern is available to us by using screeners, filter settings. I'll show you exactly how to set them up here in a few minutes. So instead of us hunting and pecking, right? Instead of us going through, hundreds of stock charts a day, we're going to use a filter set to find these patterns for us. We don't have to sit there because we're using math-based indicators. We can actually program stock screeners like this to build a list for us. So for example, Lockheed Martin is in one of my strategies called the aggressive bullish breakout strategy. You see this screener, you see my list of there's 36 stocks today that meet my criteria. Lockheed Martin's first on the list. There's Lockheed Martin that one of you in the room gave me as a stock of choice. But I didn't have to know about Lockheed. I simply run this filter, run this screener, and there's Lockheed. In fact, if we look at all of these, you're going to see very similar patterns. You see how we just flipped to the 50-day moving average. That's Berkshire Hathaway. Look at General Dynamics. L3 Harris flipping directions. Walmart flipping directions. There's Hilton, Abbott. Right? There's many things this style gives us. Number one, it gives us simplicity. It's leveraging mathematical formulas up top, then giving us lists, no matter how active we want to be. Do you want to be daily? Do you want to be trading once a week? you have a tool to search the market for very precise patterns to get us into a potential reversal breakout, right? And so there's 36 of these. I'll come back to that in a few moments. So at this stage, with this particular setup that I've just given you all, you should be able to put this onto any of your charts and start identifying where the stages of that trend their particular stock is in at that moment. Now, if we are above it, then our anticipation is to move up. If it's below it, our anticipation is a bearish move. The next component is, when do we actually trade it, right? So you have what's happening, when do I trade it, and then how do I trade it? So think in terms of what am I going to trade, when do I trade it, and how do I manage that trade? The what, when, and how of trading. These are the decisions that we make every day. We trade, but now we have a pattern way to identify the what. Now, the one thing I'm going to add here, as we look at all these stocks that you all gave to me, the next component here to me is the most important component of the when. Now I'm going to answer the when question. When do we actually buy it? Now I've got a question on Forex. Yes, the strategy works on Forex. Any symbol that you can chart, you can apply the strategy to. The only difference is going to be your money management. But identifying the trend, identifying the reversals, and then the final piece here I want to go over is volume. So to me, the most critical component of answering that magic question of when do I buy or when do I sell is going to be driven by volume, momentum. I'm going to go back to the top of the list, and I'm going to start with Amazon again. What I've done is I've turned on volume, the volume indicator. It's right here in the bottom of those moving averages. It's volume in the form of columns. That's what you see down on the bottom of the chart. The 20 represents a 20-day moving average. So similar moving average to the price on the charts themselves, but this is the daily number of shares traded. And the 20 is giving me that 20-day average of the number of shares. So it's not volume in the form of dollars and cents, it's volume in the terms of number of shares. So when we look to the volume down below, I'm going to make this a little bigger for us. I don't want it there. I want to move it below. All right, so I'm going to make this a little bigger for us. What these columns are, once again, is the number of shares traded. So let's take Amazon today, for example. So the column, the red and green is irrelevant. It's more of where is the relation of the top of the column in relation to this fuchsia, purplish, pinkish looking line here. That's the 20-day average price, average volume of number of shares traded. So if I look to today, what it's telling us is that Amazon had 65.199 million shares traded. You can see it here in this box next to the volume 20. You can see the actual hard numbers. The 58.09 million is the 20-day average number of shares traded. So I want you to think in terms of high volume, low volume. So two spectrums, high and low. Anytime the column is above the 20-day, that is high volume. I also use the term like surge, trading surge. Below is below. That's low volume. That's low side spectrum. Now there's relationships between day over day as well, but here initially I just wanted to focus on when we're above. So over the last 4 trading days, we've been surging above the 20-day average volume. Think about volume as the commitment. You see, there's the old saying, right? You can talk the talk or you can walk the talk, right? Talk the talk, you can walk the talk, right? You can talk about something or you can take action. So to me, talking is commentary, right? That's opinions. You know, there's a lot of opinions out there, of course. But when you actually invest in something, when you buy or sell, when you make a transaction, that to me is the ultimate commitment. You've actually took action upon your thinking, your thought, and you took action. So for us to be objective, we don't need to worry about what some analyst says or what someone's opinion is. We're going to see what took place, what actually happened, right? And to me, once again, money and making that buying and selling transaction decision is the commitment. So when I see high volume, that means there's a highly convicted arena of buyers present. So when I see a big red day with big red volume below it, that means a lot of people selling. It's an inarguable fact that the financial markets are driven by trading activity. I've yet to see somebody convince me otherwise. Meaning, if there's more buyers than sellers, what does price do? Price goes up. When there's more sellers than buyers, price goes down. Well, if there's a lot more buyers than normal, a ton more activity than normal, right? Price moves a lot faster. So by incorporating the volume and understanding the relationship to the pattern is going to give us the go moment. So let me explain that. I want you to see as I go back to the same first arrow of the initial crossover here. What we're going to do is look vertically at the market. We're simply now looking at where is the price in relation to the trend lines. Okay, we just moved above it. But I look down below and we have low volume. That is not a momentum breakout. See, the key phrasing is momentum first. That's what we see below us. Breakout is the pattern itself. We need them both to be aligned. So remember, this price goes down, right? Well, there was not a convicted number of buyers on board with the pattern break. So that's what I call a bull trap, meaning you get a pattern break, but you don't get the momentum. Price is actually going to go down. It's not going to go up, especially at a point of reversal. So watch what happens as the volume slows down and then we get the next volume surge appear. This now becomes the timing. We have volume below and we're still trading above that 50-day moving average. This becomes your entry strategy. That becomes your time to set up your buy moment or your go moment on that trade. Now I'm going to explain how these entries work, but this becomes our breakout entry. So now you'll see the price take off from there. That was all built and recognized by aligning the pattern of the price above with the trend lines, coupled that with the activity surging in that direction. That's why at that moment after, you see the price surge and break out. All these gaps here, look down below. Look at this surge of trading volume. You see, we weren't chasing this down. We weren't trying to run down and change the tires on a moving car. We identified this before this massive increase of volume a few days later. But this just shows you what volume does. It really breaks out. The same thing happens on the opposite price movement. Same thing happens. So when we start flipping below, we're going to now see the go moment appear. So both sides of the equation, we get a reversal. Look at below. Now you've got a surge of bearish directional volume. Now, how do you know it's selling volume? Well, look at the bar, right? By the end of that day, you can see how we closed hyper bearish, right? Big red bar. That sets us up now to say, uh-oh, this is going to go down. And it's not going to go down slow. This thing is about to break out. So the opposite of how we catch bullish breakouts, now we sit underneath the price to catch a bearish move. You can short Amazon directly, you can buy puts, right? We're using the underlying stock to identify that breakout. Same exact type of movement, driven and created, initiated by the reversal one, confirmed by volume. So remember, we confirm pattern up top, the volume below, surge. So that's why I started off the chart work earlier today, talking about the reversal. Being able to identify when something's at a crucial, when a chart, a stock, an ETF, a Forex currency pair, a futures chart, a crypto chart, when it's at a point of inflection, a point of a pending breakout. The biggest percentage movements occur after a reversal point. So if you can identify and have a measured ability to find those, where you're not hunting and down lists and lists and lists of stocks on your own, you're able to identify these breakouts. So now with this, I'm able to just pull up all these charts, and you can go back and just look at these reversal points. Look how we initially reversed here. Big red bar on August 31st for Meta. Look what happened after that. Look at the latest trend from that cross with volume. Currently down 14%, lowest was 22%, 23%. You're able to now just go vertically up and down, look at these reversals, and you'll be able to see how these price movements were displayed and what was that trigger moment. I mean, look at these. Big red bar bouncing on the backside of the 50-day, huge volume. Look what happened following. And the key is, it's not waiting until after it happened. You can see these before it happens, right? That's the whole goal, is how do we forecast what's about to happen next? Tying in very simple yet powerful tools together gives us that ability to see these surges appear. And all we're looking for, the highest probable moves, are at the crossing points. When these cross, you know, I've been around long enough. I know that moving averages have been used for a very long time. It's one of the first most commonly used and often used indicators for people starting out. Adding in the volume to it is really the turning point. Being able to have a decisive activity at that moment in time is the big driver. I mean, you could just see how identifying the break, looking down, seeing surge, that's when we start to get to the south. Same thing after the bullish move. All of this is bull trap territory. There's our big confirmation, identifying the big Tesla move. Same thing on the down move, right? We just illustrated. Look at Philip Morris, same thing. You could go back to all these reversal points and look down and see, was there committed activity below it or not? I guarantee you, you will see a very consistent identification of these breakouts. All you're tying in is, where was the price in relation to the trend lines? Number two, looking down below to see, is it a committed breakout of trading activity driving these price moves? Yeah, all of this is on Thinkorswim. These are very common indicators. The way I put them together, that may have you may get a sense of a level of proprietariness. It's a method of the last 15 years that I put together and combined in the industry, but using very simplistic tools that everyone can leverage. So what I'm going to do is I'm going to give you an idea, and I'm going to show you one of my most used trading checklists here. So this is what I shared earlier. This is how Lockheed Martin showed up, right? Aggressive bullish checklist. Here are the filter settings. So remember, the goal of this isn't to add hours and hours and hours to your trading. In fact, you're going to find that you could spend 15 minutes or less after the market's closed. I don't trade during the market hours. Very limited time to my physically trading in front of my charts. The only exception is if I'm in a class, right? If I'm teaching one of my classes, of course I'll be in a live chart. But the majority of trading for me and my traders is done after the market closes. So by leveraging these filter settings above, this is one of the 4 core strategies that we use. We're plugging in the type of pattern, the type of momentum using what I just showed you, and the technology, be it TradingView, be it stock charts, bar charts, be it Thinkorswim screener, Charles Schwab, Fidelity, you can pull lists of stocks that meet the pattern. So I teach my traders how to set up their entries, how to find the entry point, how to set profit targets, stop losses. If you want to trade the option, you can trade the option. Now remember, this strategy is something I use every day. My traders use this every day as well for their active trading, for their retirement accounts. They use it for ETFs, futures, Forex. I have some traders that trade crypto with it. The process, the base is always the same. If you're going to trade the option, you're adding another dimension to it. If you're using it for covered calls, right, it helps you identify what's the best stock to write those covered calls, right? Now, the base is what you see on the screen, 10, 20, 50 model, doesn't change. The 20-day moving average on volume doesn't change. How we use it, that becomes the strategy of your personal preference of how you run it. So for example, when I want to trade, like right now it's 4 o'clock, right? Well, it's 5 o'clock, right? So the market's been closed for an hour. What I do is I just go through and I pull up the various strategies, the screeners. Now, mind you, there's 7,200 common stocks, 7,200. This list is 36. The filters do the following for me. So number one, this sets the market cap. Now, on the filter I showed you, this isn't here, okay? This is an addition, and this is for those people that want at least small caps or higher, okay? So that's what the market cap is. To me, that's a form of liquidity. Volume, this is looking at stocks that traded at least 1 million shares today, okay? That's also liquidity. Average volume, they need to trade at least 1 million shares on average over the last 60 days. That's another liquidity search criteria. Relative volume, this gives me momentum. Anything that you see in blue here are active filters. That means they're actively being used in the search criteria. It is an and statement, not an or statement. So what that means is I need stocks that meet this market cap minimum. I need stocks to also have volume and 1 million shares per 60 days average, and they need to have relative volume above 1, and they need to be a positive change for the day, and the price needs to be crossing up. So if you think about it, there's 8 total filter criteria here, 8 of them. This is doing all the legwork to find the stocks at the appropriate pattern. Change is pattern, price is pattern. So I combine liquidity metrics with momentum metrics plus pattern. That gives me a list every single day. So for this one strategy, there's 36 matches out of 7,200 stocks. So once again, when we look at these charts, we're now looking at similar patterns. Look at that breakout for General Dynamics. They're right at that moment of a potential reversal. There's Walmart, there's Hilton, Abbott Laboratories, Owens Corning, right? Zendesk, Omnicom. Okay, so all of these stocks now, I've got a specific list at a specific point in time. From here, I now can determine what do I want to trade? When do I want to trade it? I already have everything set up. So it's looking for through the market for me automatically. So when I come to this look, now what I do is I say, okay, I want to see what's some of the latest points to profit off of. Okay, so I want to understand of the stocks in that list of 36, what has the best pattern with the biggest movement to go up, right? I'm looking at a bullish breakout, so that means I'm looking at stocks to go up, right? Bullish. So what I like to use are simple previous levels. I have several ways I pull profit targets, but this is the one I want to highlight here to keep things simple before I don't want to get too dynamic in it for the first time viewers here. So all I'm doing is going back and I'm identifying the last levels of resistance. This is where you get a grid. Now the reason, I'm not going to go much higher than that, okay? The reason I want to see this is I want to see what do we have on the near horizon where I can use as a magnet to draw my price up to. One of the most interesting things about the financial market to me is a simple adage that the price likes to go where the price has been before. I'll say that one more time. The price likes to go where the price has been before. Another way to think about that is the comfort zone. The market, the price, investors don't like to go to uncharted territories. So by laying out a profit grid on top, I have a sense of where the opportunity is. Now, initially, think about these grids as the most likely to happen first. Well, if I look to that first target, it's 5% away. It's a $1.28 price move. It's 5.23%. Well, there's a higher likelihood of the first target being hit because it's closer than the second target, which is 9.86%, right? What these grids become is price levels to manage my trade with. So if I'm trading the stock outright, I now have defined targets to close and settle some of my trades. So for example, if I buy Baker Hughes, just the stock itself, and let's say I buy it at $24.55. If we hit $25.80, what I'm going to expect is that the market is going to pull back or retrace off of this previous resistance point, which creates, so past resistance creates future resistance, past support creates future resistance. So ultimately, I anticipate that when I hit these targets, that the market's going to do what it does naturally, which is retrace, build the next base before it starts to move up again. So that's why you never get a true straight line price move, right? So if I know that I'm going to anticipate retracements here, what I want to do is maximize the trade. So what I teach is buy 100 shares. I'm going to use easy math for 100. When I hit the first target, I'm going to sell half of them. So if I bought 100 shares at, let's say, $24.55, I'm going to sell half of them at the first target. Locking in profit. I want to collect the profit and use it to pay bills, use it to buy other trades, whatever I need to do with it, I want to lock it in. Then I have half of my trade locked out, closed out for profit. I have my other half. At that point, I'm going to allow and leave my second target to close out the second half. But at the same time, I'm also strategically going to be using a stop loss to mitigate risk all the way up the grid. So initially starting off, my stop loss would be below this previous low, right? So if I had an entry here, I'm just going to draw it here just so I can explain this. As soon as I hit my first profit target, I'm going to automatically move my stop loss to break even. The reason I do that is because I want to guarantee a profit on this trade. So I close out half to lock in the profit, take it off the table. My other half of the trade now has a stop loss underneath it in case it reverses back down again. And if I do get stopped out, I'm guaranteed a profit because my other half was closed at a profit. So that allows me to have both sides of the trade protected and letting the second half run its course. At that point, that is what I call a 50-50 money management strategy, where I'm going to be looking to guarantee profit. The first step is to hit the first target, collect my profit, leave the second half to continue to grow. Now, I teach other methods of a 25 model, right? But this is trading a stock, leveraging a combination of breakout pattern, then having clearly defined targets to trade up towards while managing money, right? That is how you combine the buy, sell, and hold rapid profit method. Number one, we got to find the momentum breakout. Number two, we've got to have a consistent method of identifying our buy go moment. how we manage our profit to let trades fulfill themselves. We're not chasing markets down. I'm not chasing down an active running stock. I'm trying to find the reversal points. Then from there, it's a matter of setting up your trade to manage itself. I'll show you what that looks like with order types. But effectively, this is a grid model with clear rules of how we trade it using some of the most simplistic yet powerful approaches that are talked about everywhere. These are not, this concept of the price likes to go where the price has been before is not unique to me. That is a phenomenon in the markets that's been identified for years, decades in the market. Understanding price action, moving averages, right? Trend lines, trend line changes. Once again, decades and decades and decades, even when people were doing hand-drawn charts before we had these amazing computers today. Putting together in a consistent, applicable, easy to follow program and teaching it in the manner in which I teach it is the outcome of being able to see a very simplistic filter sets. Let's find the list. Let's find what we're going to trade when is all done using the various setups below. Now I got a couple questions here. We've got when do you trigger the next day? So when it says on the first setup, set pending entry 1 tick above the previous bar high, that's exactly what it means. I'm looking at the end of the day and I'm identifying patterns for, here's Baker Hughes, okay? So for this strategy, this is where the entry is, and it is a pending entry. So you take the high of the bar that broke the trend, okay? So that's this bar. The high is 24.53. I go 1 tick above that. 1 tick above previous bar high, 24.54. That's the entry. It's a pending entry because I set this up tonight, and I'll show you, I'll set it up in a moment. The breakout price that will trigger this trade is going to be $24.54. If Baker Hughes does not come up tomorrow and hit 24.54, then that means it's going to retrace. It will not trigger the trade the way I'm going to show you how to set it up. We're here to catch breakouts, not chase breakouts. So this time of the day right now is when I trade. This is the time that I go out and I send and identify patterns just like Baker Hughes. I then translate this pattern into an option chain and I send this in the rapid profit method trading club. I send this out to my traders. Same time, same format that I just walked you through here. Same way to find a trade is using the same filter settings. And there's 36. I'm gonna send you 1, sometimes 2, right? But the method I'm teaching you is the exact same method that I use every single day I trade. Same method. Nothing's hidden. There's nothing behind the scenes. There's no, algorithm that's behind my, acting as a crystal ball. This is the method that it runs on. Question: do you scan early morning or before market close? I scan at the end of the day, right now. This is when I look. It just fits my schedule the best. As long as you can set the trade before the next day open, then that's the time you want to set up your trade. Now I send out signals 3 times a week: Sundays, Tuesdays, Thursdays is when I send them out. So you have between 7 o'clock and 9 o'clock Eastern time is when I send them out. So Sunday night, Tuesday night, Thursday night. That gives my traders 12 to 14 hours to get my signal on their iPhone, on their phones, through SMS text messaging, through their email, or they log into our traders track record where they have all the details of every trade to pull the trade off. So it's all a matter of timing for you. But this method, once again, is exactly how I trade it throughout the day, throughout the evening, right? This is the same method over and over and over again. It's consistent. I got a question. Do you use fibs to set targets? I don't use fibs to set targets. I know how to do it. I spent 10 years under the tutelage of what some people call the father of Fibonacci. I use a different retracement pattern, a more classic 30, 50, 70 model, which is widely used, but most people tend to go to the Fibonacci sequence. I've got my own issues with Fibonacci's. I think they're just too subjective at times. There's too much subjectivity around Fibonacci sequence. I think it's a real thing. There is Fibonacci sequence all around our lives, so it's not like I'm against it by any means. But as far as helping retail traders lower the amount of subjectivity involved, I don't use that method. I use a different method to do different types of profit targets, but once again, that's a little complex for this room. It's taught in my membership area. I have a class on it. Price grid. It's similar to using resistance points as done here, but the difference is I'm not using displayed resistance. I'm using a mathematical formula to forecast forward price action. It's actually quite simple to set up, but it does take time to explain it and walk you through it. So I just don't have that much time today. But the simplest way is, as I've just done, is identify previous resistance points as future levels of resistance, right? So you can go back on any price swing, look at this up move, right? On this way down here, if I went here, you could see all of these price levels match up again. See how this low matches up with this low matches up with this low matches up with this low. That's not a happenstance, right? On the way down here, if I use previous support, look how often these previous support turn into support in the future as profit targets. Bullish, bearish. The only time you don't have this, of course, is on 52-week highs, all-time highs, all-time lows. Obviously, you won't have anything lower, but 98% of the time, 99% of the time, you're not talking about all-time highs, all-time lows. So you always have something behind to reference. Yep, Barry, I'm gonna show you, there's more, okay? There's more on this list, right? Yep. Fractals, yeah, I love fractals. I use fractals for teaching this concept of finding highs and lows. It's one of my templates to help people. Some people can't recognize highs and lows easily with their eyes, so I use fractals to teach a lot. All right, so some of the things here when I'm looking at a pattern, I want to find big green bars. So some of these aren't going to look as good as others, right? Jenko. Let's see what else we can find. I want to find big bars. I don't like gaps. You see how there's a gap between there? Gaps get filled. I don't want to trade a gap. These are some things I'll teach you how to, decipher. So here's an interesting one. So this is the type of surge, right? It's a big old surge. Look at this symbol, PAA, Plains All American Pipeline. I believe this one also is an LP. Yeah, so it's an LP, so they pay out high dividends too. High percentage of their earnings get paid out to shareholders. But they also are typically optionable too. All right, let's take a look here. So let me walk you through a setup again. Okay, so I found this using the aggressive bullish checklist. So the first thing I'm going to do is I'm going to find and confirm I've got volume. Yeah, I got volume. 15 million shares today. The average has been 6 million. Okay, so that's over double the average. All right, that looks good. All right, so let's do this. Let's plot this out. And then I'll show you how to place the trade in a trading account. So I'm going to go to the high, and I'm going to go one tick above it. So it's 1168. So we'll call that the entry order. Now I'm going to go back and find the next low below it for a stop loss. Everything has a stop loss with me. So I just found the last low, the fractal low, 2 to the left higher, 2 to the right higher. There it is. Okay, so I got a stop loss. Now from here, I'm going to go back and leverage and identify the next levels of resistance above it. Now I love the recency. See, these are recent. These just happened, right? In the world of statistical analysis, right? The closer you are to the price or to what you're evaluating has the highest likelihood of happening because it's most recent to you. Now at this stage, here's our first profit using previous resistance. We have resistance here fairly close to, but it's pretty much the same price on top of each other. Now, to get a higher profit target, I've got to go back in time. This is where I would typically use my other advanced way to find targets, but this will suffice for now. Okay. So I've got target 1, I got a target 2. So I can anticipate here the first level is 6.64% away. Let's see the second target. Let's see if we can get a big break. That's about 25% away. Okay. So something like this, we're going to use a method of following the lows that create themselves after we hit the first target. Okay. But obviously I can't forecast that yet because that hasn't happened. So we're going to initially look at this through leveraging our first profit target as the first place we're going to take that profit. All right. Now, 2 ways. I'm going to first show you a stock setup, and then I'm going to show you how to trade an option. All we're basically doing is translating what we see on the stock chart or this chart for PAA, and we're translating it into an option chain. You see, I do the options differently. I don't look in the option chains and spend, all the time it takes. And there's just so many holes to find yourself in if I'm just looking at option chains only. So what I do is I look for stocks, even ETFs, poised to break out. So I have exactly what I want. If I'm going to buy a call, I need that underlying stock to go up in price. The faster it goes up in price, the faster I can ratchet up profit on my option chain. So picking the option chain is actually the most simple part of this process if you want to trade options. So let's set up the stock trade, and we're going to use this specific price, and I'm going to put it next to me on a chart. And all I'm doing is running through a simple checklist. So I've got the trade details. Now I'm going to pull up the tracking account I use for all these trades that I manage. And here's the stock symbol, PAA. And now at this stage, I'm going to go to the stock side. So I'm going to right click. I'm going to buy custom. You see, now every trade, I always want to have a stop loss and a profit target all set up up front at one time. This is the same process how I send out signals, and it's how my traders set up their trading signals as well. So we'll use this 100 as the setup here. Now there's a green ticket, there's 2 red tickets. Okay, so an OCO is a one cancels the other. So I'm going to set up an entry for tomorrow, and if it goes live, if we hit the entry, then my stop loss and profit target will automatically be live. Okay, so that way it's always protected. So what we're going to do is I'm going to use a conditional order, and I've got lessons on how to do this, so you don't have to memorize this. But what I'm going to do is I'm going to be buying this price, and I'm just going to keep it simple. I could use a buy limit order, I can do that, but I'm going to show you this conditional order because it's the same way we trade options. First thing I'm going to do is I'm going to tell my broker to buy 100 shares of PAA only if it marks greater or equal to 1168, right? That's my pending order. That's 1 tick above. I want to catch the breakout. It's got to break out above the previous price. So 1168, that's my first order. And you see it down here. Here's the description. Submit the following order. Buy 100 shares once the security has marked greater or equal to 1168. Okay, that's the first order. Now I'm going to set up my profit target. I'm going to take half off at the first target. So I'm going to tell my broker to only sell 50 shares of the 100 I'm going to buy at $12.45. So there is the stop loss or the profit target, $12.45. Now I want to sell all of it if we come and hit $10.67. All I'm doing is pulling that right off the chart. Nothing magical, it's just right off the chart. That's all it is, okay? So from here, this is my open, these are my closing orders. That's all it is. Once I set this up, you're gonna see the confirmation screen. It says exactly what I told it to do, right? It's gonna buy those shares if PAA, and it's only good for tomorrow. Now, I need to update this. So these are good for the till they close. This is good till close. This is good till close. Okay, so the entry is just good for the day. I want to catch the breakout tomorrow. I'm looking at a daily chart, identified a daily pattern. I want to catch the daily break. So I'm using the daily chart, thus I'm using a good for the day ordered. Now I always want to have my trades protected. So I have a good till close. So if the stop loss gets hit first, the profit target automatically cancels. Thus the one cancels the other. Whichever happens first, the other trade will cancel. So once I set that up and tell my broker that, this trade is now working. In the top right, you'll see it says waiting on the conditions, right? So wait conditional order. The condition is marking above, at or above. So if it breaks out and opens with a gap, it's going to catch that trade. It's catching, I'm not chasing. Same thing if we go to like Baker Hughes, same concept. I'll do it again on Baker Hughes. We have our targets. I'm going to handle the first trade first. Stop loss in this example, I'd probably just use one of our moving averages. Let's use our 10-day moving average as stop loss. Right? So same concept. I'm going to come into Baker. I'm going to set up my trade criteria, OCO bracket. Here's my open order. Here's my closing orders. Let's say you've got 20 shares you want to buy. Okay, then we just update the numbers to match. Remember, I'm going to take half off at the first target. I'm going to set the condition to buy at the market price if Baker breaks out at or above 24.54. That's the entry. I'm going to take half my profit off the table at the first target, which is 25.80. I'm going to make sure if I get stopped out that I close everything out so I can limit my loss at 23.20. I want to keep my exits good till close. At this point, here's the trade details. Everything's protected, both sides. Another trade working. I'm not in front of my computer having to smash the keyboard. I'm not in that market, and I'm letting my emotions make decisions because I made it now. There's no noise, there's no activity. I saw what happened, identified a pending breakout, went through the checklist, set up the trade. Now my work is done. The reason I have these OCO order types is it creates freedom. I could literally set this trade up as I just did and never come back to my charts again. Never have to send it off again. Never have to come into my account again because every piece of the puzzle is protected. I either take my profit off or I get stopped out. But I made the decision without all the noise, and I did it when the markets cooled off, there's no activity, and that creates less anxiety around trading. The second piece of this is if you want to trade options. So when you look to, here's some of these active positions. Let me show you some of these positions here. You can see all the data here. So this is a signal here from, let me pull up one of these examples down here. So this is what happens. You see this? This is an AMLX trade from looks like 11 days ago. You see this time it triggered 9:32:57 seconds. These trades automatically filled because they hit the criteria, just as we did here. So all of those all start like this in green. Tomorrow happens, and if it hits the number, then we're into the trade, and everything's protected. It's waiting conditionally until it happens. Trading an option, everything's the same concept, but the The nuance is that we're now going to be trading the same method, but we're looking at the option chains themselves. Now, in my opinion, in the option world, the less you know, the more you know, because it can be highly complex. This selection factor down here is as straightforward as I've seen, being able to teach it. So if you want to trade the option, then we have criteria. We want to find deltas between 65 to 75. What that does is puts us in the money on these option chains, starting out of the gate. Open interest minimum greater than 100 is the liquidity factor. We want liquidity. Same thing on volume for the stock side. Open interest is liquidity on the option side. We want enough time on this expiration that we select to let the trade fulfill itself without running into theta, which is time decay. So we select 45 days as a minimum. Today's, we can go to 30 days because there's a lot of volatility. Spread less than 10%. Okay, we don't want things that are juiced up, so we want to make sure that we have a small spread on the option chains we select. If these are not there on an optionable stock, then we don't trade the option. So if I come to something like, let's go back to Baker Hughes here. First things I'm going to look at, we want to buy a call to go along with that stock trade, or you just want to trade the option. It's up to you, whatever your preference is. October is too soon. That's only 3 days. Okay. We don't have a less than 90. We don't have a greater than 45. The market's volatile right now, so 30 days is fine. So the next month is the 18th of November expiration. So the first thing I'm going to do is I'm going to come down to the strike prices here on the call side, 65.75 delta. Okay, that puts us here on the $23 strike. We have open interest greater than 100 at 2,000, so there's liquidity around this chain. The spread is right at 10%, so 20 cents is the difference between $2.20 and $2. At 20 cents comes out to 10 cents, a little less than 10%, right? So that is a check box for options. Okay, so you want to trade the option. Well, we know the strike price, we know the expiration month. So same thing we did earlier on the stock trade up here, but now we're doing it on the stock, on the option itself. So now instead of clicking the ask on the stock, on the underlying, I'm coming down to the option chain. So here, same thing. My green's my open orders, my red tickets are my closing orders. So now I'm going to take the same details here on the Baker Hughes stock chart, and I'm going to plug them in here to execute this option trade for me. So we're going to buy the option at the market price. If Baker, this underlying stock, marks at or above 24.54. That's the entry order. Now I'm going to set up my stop loss to sell at the market the option chain if Baker is less than or equal to 23.20. That's my stop loss. I'm going to use the first profit target here. I'm just going to use one profit target on the option chain. Reason why is because we have to worry about expiration. 25.80 is the profit target. So same concept that I just ran on the stock, but now we're trading the option. So now we're telling the broker how to execute the option trade for us. Order number one, we're going to buy 10 contracts. Here's the expiration month. There's the strike price. Only if Baker marks at or above 24.54. We're going to sell if we get stopped out at 23.20. We're going to close out at profit if we hit 25.80. Now I've got an automatic executed option chain waiting for the market tomorrow. Many of you are probably like, wow, I've never seen that. Okay, that's fine. And that's what I'm here for. But the method is all about providing you an ability to identify, number one, market direction, number two, the prime time moment to catch a breakout, not chase it. You see, we're not actively in the market smashing that keyboard, making emotional decisions. We are identifying with no noise, pending breakout. We've already gone through it. I've shown you on your picks alone how you can identify these reversal points. All we're doing, and here's a great example of Baker breaking out, eerily similar to what we just set up now, isn't it? Does this pattern right here on the screen that did this, does this bullish breakout look like this? Let me get rid of this replay. Doesn't that look eerily similar to this price action here? And we found that just using the filter settings. Now, you don't have to learn this out of the gate. Remember, this strategy, I deliver trades to you. This is the details that you receive in each signal. Right? You get the full transparent details of all the signals. You get screenshots of what the ticket was, just as I showed you here. So you can essentially copy and paste this and double check your work, all laid out. So initially what people do, and what my clients have done here, is they see this, they see the strategy, and they go, wow, I want to really learn how to do this myself. And at the same time, they say, well, I really appreciate getting your picks, Matt, to help along. And that's the birth of the rapid profit method. And all my other various programs that I run, there's only 3 of them, and they all use the same basis. The only reason they're different is because the nature in which I send out signals. Some of them are low cost options, some of them are just stock picks only, right? But they all use the same method. So as far as details, this is what you receive on each signal. So this is an example of a signal RVNC that was sent out. And pull up the actual email. There you go. There's the full trade details. So this is what I deliver 3 times a week, are these setups that look just like this. Full details, you know exactly what to trade, when to trade it, what option chain to select if you want to trade the option. You got your stock trigger price, you have your stop loss, you have your profit target, all laid out. Question, what if it stays between your stop loss and targets? The signals, well over 300, probably 400 signals now, close to, it's about 3 or 4% don't hit the profit target stop loss. So what we do is I then send you out how to manage it. What are the targets to get out at? And that's only when we run up against expiration month. Our goal is to get out 7 days. We want to be out at least 7 days prior to expiration month to avoid the theta kicking up. So in that instance, I'll give specific instructions on how to get out. Yep, exactly. Now, if that, for many that see that for the first time, the method of putting it all together is what normally stands out. The process of actually diving into this and identifying these opportunities is as straightforward as I shared with you initially. Being able to identify these pattern moves is the same process over and over again. To help assimilate you to the method itself, I have specific sessions every single week. They're the Market Pro Live Club sessions. So they're live sessions with me twice a week, about 2 hours apiece. And it's about analyzing the market, and it's about identifying the next pending moves across the larger broad market. So break down the SPY, the NASDAQ, the Russell 2000, also the diamonds. We look at gold, we look at oil, we look at the VIX, we look at the dollar index at a high level, so we understand what's happening across the larger broad market. Consider that your 30,000 foot view. And then I'll take it down into the 10,000 foot view, into different sectors and industries, leveraging ETFs as our basis of measurement to find buckets of opportunities in the market. So it's not just a matter of just getting signals, which you can do, but most people I work with want to actually learn this. So they take the signals as well, of course, to try to bolster up and get to a point of doing this on their own and making some money along the way. But then they also take what I teach and they use it throughout their entire trading. It evolves their entire method. We talk about all sorts of ranges of strategies and tactics to help capture profits. Even outside of signals, it's about analyzing, understanding what to expect in the markets. So the buy, sell, and hold rapid profit method, there's nothing, you don't have to download anything. There's no complex strategies you have to pick up and take months and months and months to figure out. If you learned one or two things today in this short time we had, imagine what the next 12 months would bring you as far as understanding how to forecast the next moves in this market. This is all you need to place a trade. You need to know what you're trading, the direction, where are you getting in, and how you're getting out. In the signal program, I give you all of those all up front. You don't have to wait for me to tell you to do anything. It's all delivered up front. Once again, the performance of the last few weeks is as follows: 60% win rate, profit net over 254%. If you average $3,000 per trade, that would be $7,600 in profit on top of the investment. That's pure profit in that formula. If you trade $1,000 per trade, that's $2,500 in profit in the last few weeks. Okay, so it's all about what you want to put in, what you get out. I recommend always starting with a demo account and something new, just so you can get familiar with how to place trades, the frequency, the data, and then you can always evolve to placing real money. But everyone's going to be different on their confidence level. So this program has been put together and is really an accumulation of the last 15 years of experience in this industry. So get this question a lot: what do you need to follow along with? Well, you need a trading account, number one. I recommend you sign up for our SMS text message, so that way you get your signals on your phones. Make sure you have a good email. You whitelist my email, so that way it gets delivered to you. And you need to have a good computer, laptop, tablet, right? So you can log in and get the trades off the trade tracker as well. The options experience side, I've really discovered that if I can give you the basic foundation of options trading, plus give you access as you progress to more advanced trading mechanics, then you don't need a ton of experience here. So to overcome this, what I've done is I put together what's called the Options Mastery Academy, which is a module to help you understand how to follow along with these option signals. It's like 40 plus option strategies there. So you're going to get a free bonus of that academy. The frequency of these signals is Sunday, Tuesday, Thursdays between 7 o'clock and 9 o'clock Eastern time. I'm in Florida. That gives you 12 to 14 hours to set that trade up. You can set it up before the market opens, the day of. You can do it at night like I do. It's up to you on your schedule. On average, it'll take you, starting off, about 5 minutes to put the trade in, is what I see with my traders. And then after a few weeks, you'll be able to do it in probably 90 seconds, 60 seconds or less. I showed you bearish breakouts, showed you bullish breakouts. The only difference is the strategy and how we use it. But I send out calls, send out puts, straight stocks. It's all about the breakout pattern, regardless if it's up or down. All year, been a lot of bearish conditions, of course, but we still traded a predominant buy side activity. The question of how is this program different? To me, I go to transparency, number one. Transparency in the form of the signal themselves. They're delivered up front. One of the common frustrations that I've heard from traders in the industry is the lack of an ability to mirror or match the signal service results. And to me, a lot of that is based on the nature and how they're delivered to you. Most other services tell you what to trade. They may even give you the details of the option chain, but they don't really have that clear exit in plan laid out for you. And so here you get everything up front. So there's no out of view manual analysis being done without you being aware of it, because it's all done up front. So the program itself is going to deliver signals that look just like this. That's an example of 4. Those are all real trades that were sent out. Full details on the SMS, full details on the email. You could trade just off the email, you could trade just off the SMS. It's all the same details. So you can make it easy, follow along. You can learn how to do this in my classes I teach every week, or you can do both. I recommend you do both to really maximize the experience, but ultimately that's up to you to decide. But you have access to actually learn this, and I'll show you how. Now, everybody has a guarantee, so I have one too. All right, so it's very simple. It's as simple and effective. We don't have an army of people here that's going to call you on the phones every day to try to get you to buy something else. We don't have that operation. I told you why about my history. It's not something I'm interested in these days. So we keep everything simple, and for our guarantee, it's just time-based. Let us know in the first 30 days if you're not satisfied for any reason, and if you are unsatisfied, just email us to our support line, create a support ticket, let us know that you want your money back, and we'll give you your money back. No questions asked. It's as simple as that. It's just time-based. Now, remember, it's all about return on investment. So if you would have spent a couple $100 over the last several weeks with this program, if you started about a month ago, could you get a return on that investment? I think you would have, right? Very simple, very straightforward concept here. So if you can do with an extra couple $1,000s in side income following along my signals, if you got more time, then come join me in classes and live sessions, and you can actually learn how to do this yourself along the way. But if you could, and I assume you are, because that's why you're here, is to make more money than what you're currently doing, then this program is a great first start. So to sign up, you're going to go to rapidprofitsmethod.com with an S, it's plural, rapidprofitsmethod.com. Before you go to that site though and sign up, I'm going to give you a special pricing opportunity for Investorexpo here. Now, I will say this, the open enrollment period is now over. This is the last session you will see with your ability to join this program. I only have open enrollment for a few weeks out of the year. The reason is simple. I do this because I want to be able to take you through a learning track with a block of people that start around the same time. So that way I have a very consistent ability to take my newbies and develop you over the next few weeks. So I don't have just open enrollment all year long. It's not how I found to be most effective. So this is the last session you'll see for several months in this group. So before you go there, I've got a gift for you. But I want to give you as many tools I can to help you really take advantage of this opportunity. The first bonus I'm going to give you is access to my Market Pro Live trading sessions. It's twice a week live, 2 hours a piece on average. So you're talking over 200 hours throughout a year of live in the market trading analysis and trading strategy every single week. I'm going to give you access to my empowerment toolbox. This is a module that I've put all of the various tools, from calculators to checklists to watch lists of mine to lessons on the actual strategy itself. So you can go watch pre-recorded lessons on every piece of the strategy. And I'm going to include that toolbox for you all today. I already discussed this, but I want to get you the Options Master Academy as well. And then the fourth bonus is money management training. This is where we talk about how to set multiple profit targets, how to scale in, how to scale out. We do that both on options as well. So with these bonuses included, this is a full encompassing program. First bonus, Mondays at 7 o'clock, Thursdays at 12 p.m. are my live sessions. We have a huge archive library for you. So you can go back and look at key reversals in the market and go look to see how we called it. You're able to go back at any point in time and see what that analysis was. And of course, if you miss any live sessions, you have the archive to go back and review. Empowerment Toolbox, here's a couple of my favorite items in the toolbox. You've got my checklist. I already showed you one of them. You also have over 10.5 hours of pre-recorded lessons on the momentum breakout strategy by itself, included in the toolbox. You also have my watch list and other calculators there for you. The third bonus is the Options Mastery Academy. So how to read option chains for beginners, intermediate option traders, as well as advanced traders. There's 40 plus strategies included in this Options Mastery Academy guide for you. And of course, money management, right? That's a key crucial component of the buy, sell, and hold method, is how you actually manage your profits and how to mitigate your risk using various stop loss methods. So all in all, you have the rapid profit method as a whole, which is the signal service program, plus you have all the bonuses. All of that is available right now. It's the last day to lock this in. You have just a few hours before the books are closed on this open enrollment period. It's $299 for the entire year, and that includes all of the bonuses for just $299 for the year. But I told you I had a gift for you. The first 10 that go to this site right now and check out, go to the coupon code and type in MATT100. So the first 10 that go to that page right now will save another $100 off and get everything I explained to you, everything I walked you through, for $199 for the year, just for the first 10. So now is where I'd want you to go to that site. So remember, that coupon code is MATT100. It's in the coupon code. When you type in that URL, it's going to take you over to and redirect you to the special page we have for Investorexpo. So don't worry if you see the URL change. That's on purpose. We have a short link so it's not difficult to type in. So all you have to do now is go to rapidprofits with an S method.com, click add to cart. It'll take you to the checkout page. On that checkout page, I also had the team include 2 bonuses that you can add on at this point. First one is the Options Profit Generator. That's a additional signal service program. Normally it's $8.99 for the year, $9.99 for the year, in that range, but you can sign up and go month to month if you want to add it on now. Everything you sign up for today, you add on, is under the 30-day guarantee. So if you don't like it for some reason, or life happens and life gets in the way, let us know. We can pause your access. We can work with you to make it fit. If it doesn't fit, then of course we'll give you your money back. The reason we're able to offer this price, I get that question all the time, why is it so low? Well, the reason why is because we leverage partnerships, number one, for marketing. We don't have a huge marketing budget, nor do we need one. We don't have a huge sales team that's going to hit the phones and call you after the event today. We use technology to deliver signals through SMS services, email services, to lessen the overall operating costs. And so in turn, we then pass those savings on to you directly. The reason that we can maintain this price is because we have hundreds and hundreds of traders that follow us every single year. So by leveraging partners like Investorexpo, then leveraging our internal traders, referring us to their friends and family members, coworkers, and even at times strangers, that's how we're able to grow and able to keep this price where it is. So for just a few $100s for the year, you'll have access to everything I just shared with you. Yeah, so it says last Friday I had the most put purchases. I went long SPY late Friday. Do you watch total call put numbers? Yeah, all of that is uncovered and shown through the different methods we use to find option chains and evaluate the total overall market. So 100%. You can go back and watch the last few weeks of Market Pro Live sessions. You'll hear all that commentary that we describe. Yeah, all those concepts are what we go into and evaluate every single week. So the Market Pro Live, the way to think about the live sessions, that's on top of this program, right? So that program isn't just to teach the rapid profit method, because it's just the signal service. The Market Pro Live session is a broad market that we drill all the way down from broad market, go all the way down to individual opportunities to trade outside of just the signal of the day or signal of the week. It's what's happening in the market today, and then how do we capitalize on those conditions. So the availability of taking advantage of overall strategy and tactics is tremendous in those sessions. Because we're not pigeonholed into one method. It's all about what's happening now. Okay, well, how do we then formulate the profit plan based on today's conditions? Because it's a lot different than it was 10 months ago, right? It's a lot different than it was 2 months ago. Good question there. Yeah, make sure you put in that 199. If the price wasn't there, we'll make sure the team sees it. So yeah, I mean, I see your comment. Well, my team's here facilitating this. So we've got Alan and Linda here facilitating. So you'll see them comment to you. So we'll make sure we get you taken care of. Yeah, includes the live sessions. Yep, it's all inclusive. This price gets you everything I walked you through, all the bonuses, the signal program, all the entire year. If you stay active, you'll keep the price you pay today. So 12 months from now, if you like it, you want to keep going forward, you have the same price. You lock it in effectively. I'm going to hang out here. So if you have questions, feel free to type in the question section. Yeah, just keep in mind, this is the last open enrollment session that we had. It's $199 a year. I know exactly what's being offered in this industry. I've got contacts and associates all over the industry, been doing this a very long time. From a chief revenue officer perspective, all the contacts and all the partners there, to being actively engaged in other partnerships like Investorexpo. Programs like this, $2,000, $3,000, $4,000 plus being sold today. I've told you the differences in how I like to do things. To me, it's about building value and building lifelong clients, not just worried about the next product to be sold. You may have yet, man. Comment is, have I seen you trading with another group? You may have. I mean, I've literally been online in this industry since 2007. Hey, Shelby, good to see you, buddy. Pat's on board. I love it. Yeah, so question on what is included. Okay, so what's included is all of the email alerts, SMS. So the trading signal program is under the rapid profits method. Okay, that's the program. You're also going to receive all of these bonuses here. So you're getting the signal program plus no additional charge. You're getting twice a week live training sessions, access to my empowerment toolbox, access to the Options Master Academy, and then access to the money management training. So the signal program plus these 4 bonuses. Oh, you're moving? Yeah, I haven't seen it in a while. Trading volume is 20 days is the average. If I'm long-term, oh, sorry, Kim, not Linda. So Kim's with us. I apologize. I just got a note from Kim. Yeah, so Kim and Alan are helping facilitate. Yep, you're welcome. Yeah, so if I'm using a longer term, like the 50, 100, 200, the volume's 100. Whatever the middle indicator is, I'll match that to the volume below. You want a mean, you want something that's consistent on the analysis. Yeah, so if you're signing up or in the process of, just type a note, say, signing up, just so we can keep track of you through the checkout process, just to make sure everything's delivered. If you have any issues signing up, any errors or anything like that, let us know. It's, it's the internet, right? So, things can happen. So let me know if anything's bogging you down on the technology sign up process. So effectively what's going to happen next, you signed up, you should get an invoice receipt effectively. Okay, then you're going to get a welcome email. Welcome email is going to have your login credentials to log into the site. You don't need a password. It's email because of cookies. So just an email. When you actually get to the login page, use the email you signed up with. Once you log in, you'll see all the modules of the program itself. In about 15 minutes, you'll receive a GoToWebinar confirmation. That is for the Market Pro Life sessions. It's clearly labeled. You won't be able to miss it, but that is for Mondays and Thursday sessions. It's the same link for all the sessions. And today's Tuesday. I think you all know what one of the signals is going to be because we just found it together. But at that point, we'll get them out. Yeah, every class is recorded. Every session is always recorded. Every session we have, I mean, there's probably, GoToWebinar doesn't like let us store all of them, but there's like 80 that you can always go back and see. Yeah, they're posted about an hour and a half after the event. So by 10 o'clock at night, the 7 o'clock is posted, 10 or 11 o'clock, depending on how long the session is, but they average 2 hours, but it's broken out in segments so you can come in and get what you want out of it. First 30 minutes to 45 minutes is the 30,000 foot view. So that's always a deep dive into the S&P 500, the NASDAQ, the Russell 2000, DIA symbol, which is the diamond, with analysis into the dollar index, the VIX, and then oil. Those are the main 3 additional indicators we've been monitoring over the last several months. Then after that, we go into sectors and industries. So like energy, consumer staples, utilities. We'll look for opportunities around different technology industries as well, biotech, healthcare, whatever is at a breakout from a sector basis. Then we can drill down into the various stocks in those sectors to identify trades as well. And then the latter half is about picks, right? People will give me stocks to look at. They ask questions about strategies, questions about, different methods of option trading, right? So it's really a wide range of current event topics and strategies. We always go into the fundamental announcements, some of the economic data, especially with all the inflationary data releases that come up. We have earnings season right now, so it's definitely a busy and active, volatile time. We're obviously in a poor economic situation, right? So there's a lot of impacts that we talk about from a macro level. Yeah, Dodani, we'll get somebody on the phone to help you out. Yep, I see your comment. Looking forward to it, Lisa. Yeah, I'm going to put this up too. So if there's any questions, here's our support information here. If you want to jot it down, take a screenshot of it if you want. Yeah, it looks like we got the last group to enter here. That'll be fun. So next live session's Thursday at 12. The reason we have them staggered like that is intentional. It gives us 2.5 days. So all the analysis done in the Market Pro Life sessions are analyzing what's upcoming for the next couple days, right? So we're on top of the market every single day on a 2.5 day basis, right? So you have, after Monday night, you have all day Tuesday, all day Wednesday, half a day Thursday, and then we meet at Thursday at 12. So then we have the rest of the day Thursday, all day Friday, all day Monday, and that's 2.5 days both sides. So we bookend the market and the timing, so we're always trending and always on top of the latest price points, right? So we forecast, right? So the SPY move today, the gap start we talked about in our latest video that we had. Now the next thing is, do we find support off the 10 and 20? And if we find support up to 10 to 20 after today, over the next couple of days, then that should give us the base to challenge the 50-day moving average again, right? To start moving upward towards that 50-day moving average. So we already talked about all that, and we'll be reviewing that again on Thursday to see what took place and then what's the next move to follow that. Yeah, and you guys, and that's one of the benefits. I got a comment, we'll be more active in November. Yeah, it's all up to, it's all based on your schedule and what's going on. I have 2 small children. They're very active. They're 8 and 9 years old. That was another reason I left my executive role, was to be more involved in their lives. So I definitely 100% appreciate the importance of family and obligations. Yeah, we have an interesting group too. I got questions on trading accounts and brokers, what broker. Look, I'll tell you this, I'm very familiar with Thinkorswim and trading and TD Ameritrade. That's what I've used for years. But my clientele base is using all sorts of brokers, from Charles Schwab, Fidelity, Interactive Brokers, Tastyworks, TC2000 platforms. I mean, so there's a wealth of knowledge in our group as well. So if there's anything I'm not aware of or anything new that's happening, then my clients have no problem telling me or helping other clients find solutions that they may have experience in. So it's a really a close-knit group of active participants that help to add value every session that we have. So it's really a fun group to be with. Are these only directional? No, we get all the way down to entry exits, 100%. Talk about how to trade consolidation, choppy markets. I mean, how to identify double tops, how to double bottoms, how to trade them with entries, stop losses, profit targets, how to trade consolidation in the form of triangle patterns, how to anticipate the breakouts of those triangles and how to trade them. Yeah. It's all about driving down to the actual transaction, right? Actually buying and selling. So all the tools, all the research is all designed to bring us to a point of a decision in the market. Yeah. Yeah, timing's everything. Yeah. So that when question, that's where we use momentum on the when. All right, looks like we've got a strong handle on the questions. Yeah, I love it. Watching volume has kept me out of trouble. Yeah, 100%. That's what I describe as bull traps and bear traps. You get a pattern break, but you don't get the volume. And what you're also going to see is volume ends trends. So you'll be able to also identify when a trend is about to end. And that's spectrum volume side. Yeah, volume is a powerful tool. It's in my experience, it's underutilized in the retail space. I don't actively trade futures, but I know futures. Yes. Yeah, all the same concepts apply, which is why I enjoy this type of strategy, because it's not a stock type specific, it's not a market cap type stock specific strategy. It's not a stock only, it's not an ETF only. It's the same method I have on any analysis. I use the same base set no matter what I'm looking at. Could be looking at the 30-year mortgage rates. Could be looking at the bond yields used on the euro dollar, right? When do we expect the euro dollar to get out of below parity, right? The pound dollar, Aussie dollar. Could look at oil, natural gas. Yeah, futures a good market. Yeah, 100%. Yeah, so it's really symbol agnostic. If you can see the volume, if you can see the price, if you can roll on the moving average to it, you can trade anything with it. You can really use it to forecast almost any symbol, any type of market. Yeah, everyone has ups and downs. It's a comment. I have my ups and downs. Yeah, 100%. That's where half the battle is being able to stay in the fight, and staying in the fight is in money management. I mean, ideally with the right profit targets, right stop loss, right, base setup process, you should be able to make money being 40% right, 30% right. Understanding when to scale up, when to scale down, right? Those are all wildly important to, once again, stay in the fight, being able to weather any drawdown. I mean, you look at these hedge funds, and I think it was BlackRock. BlackRock's the largest hedge fund, was down 16, 17% in the second quarter, right? And that company has almost $1 trillion of assets under management. The one thing I keep telling to, we talk about in the sessions is that the retail trader like you and I, the benefit that we have is we're nimble. We can switch directions. We can pivot light years ahead of billions of dollars in assets. Oh yeah, 100%. Yeah, I mean, as soon as you're in the profit, just exit your trade, right? I mean, you get 1 fraction of a percent profit, close it out, and you can say, you're a 100% trader. But hey, I guess some people are like that, right? Some people will tout that stuff, but it's not realistic. 100%. Maybe one trade he placed, I don't know. Couldn't stop laughing. How does this differ from Market Pro Live? So are you in the Evergreen? So this program is unique to any program I have. So if you're on any other signal service program, these are unique signals. I don't overlap signals per group. There's the rapid profit method, there's the options profit generator, and then I've got the cash attractor program. And every signal and option profit generator, they're one and the same. So there's really 3 core programs, and they're all unique. There's no overlaps in the groups. Yeah, your email, you'll get your first email tonight. Yeah, you'll get your first email tonight. Yep, everything starts today, Tuesday. So we'll send out signals. The key thing to think about is your good till date. So the majority of signals is good for the next day. I send it, you'll know because it says it in the signal. Like this was a example of a few weeks ago, right? So this entry good till date, that's important. So for example, if tonight's signal says good till tomorrow, then that's good till tomorrow. So that means it has to hit the price tomorrow. If it doesn't hit tomorrow, the trade's canceled. So if you use the method of the method I shared with you here today, it's also in the modules, so you can watch how to set up the trades. Then it'll automatically cancel if it's not hit. But you don't want to leave these entries open beyond the entry good till date. Because remember, we're looking at a daily chart, daily pattern. So with the daily pattern, we're looking for a precise daily pattern breakout. So if it doesn't happen the next day, then it's not the same pattern. More than likely, it's retracing before it goes. And we don't want to deal with the drawdown as much as possible. Can't get rid of all of it. Nobody can get rid of all of the drawdown, but we try to limit it by the entry strategy we use. Yeah, all the videos are inside of your membership area. So you should receive your welcome email, and inside your welcome email, you'll have the login link, and then you should have your directions to log in. And then when you get into this page, all of that access is shown inside of there. Yep, trade options for leverage. I love it. All right, so what I'm gonna do is I'm gonna leave this open for a few more minutes. So if you have any questions, I got my team here moderating the question section. But I've got to, I'm gonna head out at this point. I've got all the questions answered, but if you have any more, feel free to type them in and my team will be able to see them to make sure we get you all taken care of. So once again, I do appreciate it. Looking forward to working with my new group, joining our program today. Then of course, welcoming you to the Market Pro Live Club, which is our live sessions as well. So we'll see you for that on Thursday at high noon. You'll get the invitations for all that, and you'll get the reminders as well. So put on your calendars, Thursdays at 12 p.m. Eastern, and then Mondays at 7 p.m. Eastern. Appreciate you all. Happy trading, and I will see you in our next session. Thank you all.